Microsoft Accelerator Team today. What we intend to share with you is how the corporate accelerators running the programs in conjunction with partners and other accelerators and startups, learning from one another, good practice, what is going on, and how it could learn from them. So it's my pleasure to hand over the podium now to Ravina Slani from Microsoft. Take to the proceedings today.
Thank you. Thank you so much. First of all, good afternoon to all of you for being here. Thanks for being here. Want to welcome you to this, the third edition of our meeting since we last started off. The first one was done a year ago. This last one was done in June in Think Next, and we're here today. What I want to do is, introduce all of you in the room. There are a lot of people in the room, so we won't go through the quick round of introductions of people who haven't been here before, because most of you know each other. But I would request the people who are here for the first time only to introduce their name and the company they're from, so that the rest can get to know, and then we'll make sure that we're going to connect substantially together. So, around the table. And please use the table.
Sriram Parvatula,
Please.
Sriram Parvatula Cisco. We just launched Cisco Launchpad earlier this year, June 30th, and we're in the middle of our first one.
John Kuruvilla, Brigade Green. We're India's first real estate focused accelerator.
I'm Savita. I work with Sriram in Cisco Accelerators.
I'm Satish Vaidyanathan. I'm a PayPal incubator in Chennai.
My name is Aditya. I run Startup Tunnel out of Delhi.
It's not working. I'm Rasmin Kumar, and I work for SAP Lab India, and we run a program called Startup Studio. We just recently launched, only 6 months.
My name is Sandeep. I'm with Oracle, and we just launched an accelerator about 5 months ago.
I'm Ravindra Pathak, Airbus. We have accelerators for BizLab, launched 6 months back.
So hi, I'm Siddharth Rajchandran from Airbus BizLabs.
I'm Masayoshi Tamra, working from Hitachi, India, and I'm learning from India.
Thank you.
I'm Praveen. I'm part of Tata Legacy. We have 18 months program for focus startups.
I'm Avnish, I lead Accenture Ventures.
Hi, I'm Shweta Shetty. I represent Startup Bootcamp in India.
Shankar, Accelerators. Yeah, I think. No, there is some Prabha.
I am Prabha. I run the Catalyst program for Society.
Hi, I'm Satya. Actually, I'm from the KBITS Karnataka Biotechnology and IT Services. So we have set up a startup cell in Karnataka where we encourage all the Karnataka startups to nurture them and give them all the benefits and incubation support and booster kits. We have different funding programs and all the other benefits so that they can actually go forward.
Many of you folks are Karnataka-based startups.
So we request you to please direct the Karnataka-based startups to us so that we can actually register them. First, we certify that they are the startups after evaluation, and then we give them access to all the booster kits and other incubators and accelerators. We connect with them.
Thank you. Anybody new? Yes.
Hi guys, I'm with Access Partners. We have received $1 million in capital. Some of our funds, some of our companies are Flipkart and Meesho. Typically, I see they have the market.
Hi, this is Shweta from Zone Startups India. We are essentially an international tech accelerator based out of Bombay Stock Exchange.
And you got Gokul, right?
Yeah. Hi, this is Gokul from Thought Factory, part of Zone Startups. We run the accelerator for Axis Bank here in Bangalore.
I'm Ramanan Ganesan from Institute of Product Leadership. We run a business incubator as part of our program, creating ideas to fundable startups.
Fantastic. Thank you.
Amit.
Hi everyone,
Hi.
Amit from Swiss Re. So I run Swiss Re's InsurTech Accelerator, that's India's first insurance-focused accelerator.
And here's Shubhanga.
Yeah, hi, Shubhanga here. I work with Yes Bank and we're going to start our accelerator program soon, focusing exclusively on fintech.
I'm Austin Narona, I'm with Sony, I'm based in Silicon Valley, I'm just come here to see what's going on. It seems a lot is going on. So.
Hi, I'm Simo from Twitter and Jakarta. It's a Japanese VC. We do accelerator program for Japanese local government.
So today our agenda is going to be predominantly the introductions of people who have joined us, so thank you for joining us. But more importantly is what we want to do is walk you through what we're going to go through. Today is a packed session for 2 hours, so we're going to go through the journey so far, or where we've come from, a couple of key learnings of what's happening, how do we accelerate ourselves in the process of helping startups. We need help, and we ourselves are actually in many organizations the startup cell of that organization. So we have to work like a startup, think like a startup, be lean, be frugal, and also look for innovation. We have to demonstrate that value. And a lot of the large enterprises are also looking at us from that belief that we will bring back a lot of insights into the way we run our businesses also in the future. A quick view of that, because everything in this room is about a conversation about where we think we want to be, but maybe we need to step back and look at the landscape. So we have a report of what the accelerator landscape in India is vis-a-vis other markets in the world. We'll walk you through a couple of real-world examples of how we think where we are. I might move the session a little lower because I have two key partners here. I want to bring in the voice of customer. We have Priyank from Axel as mentioned, but predominantly we always have this belief that we want to get expectations from VCs to invest in startups. So here we'll hear from one of the premier investors in the world as to the canvas of what they want from a startup. And maybe we calibrate our programs accordingly because we are also helping the startups succeed, and one of the key areas is to get them to a VC and invest in and successful, right? As much as us. And so the voice of a VC perspective, we have a startup here. So Ankit is with mine. Ankit Gupta will come in and he will speak about the voice of the startup. So Ankit is a founder of Pulse. He sold his company to LinkedIn, and he chose not to be accelerated after being chosen in an accelerator. So we learn his learnings of why he doesn't want to go to an accelerator, and if he had to go back, what would he want, and therefore we can calibrate our learnings. From there, we'll get into update on key areas based on the segments, and then we will close in a discussion. We want certain outcomes from us, so we'll take it from there. What I want to do is a quick recap of this. So we want to make sure we take a picture together, so that this team and this family includes and closer as we go along. And there are very interesting insights from others who will come in as we go along in this discussion. In the last recap, I want to actually stress on what we've achieved together. Together, we came together as an industry. We realized the need that we need help. So 90% of the folks who attended last time have turned up with other partners from their organization, but to sell the story more and more. But they've all come back, so it shows that there is momentum. There is a regular cadence we have committed to, and we're coming back with that cadence. We stuck to October 26th. On June 23rd, and we are back again on this day, very day, which is committed again, which is good to have the rhythm. We're also then set up engagement channels. We have a WhatsApp group which has, I think, almost all of you. If you're not there in that group, just let me know on a quiet thread, and I will make sure I add you in. So, and as leaders, we need to talk to each other and ask help. And the most critical thing is we identified 4 areas we thought were challenges or areas we need help. So mentoring, customer access, funding, and best practices. But the landscape we have is not unique to us. It is the same canvas that's playing out in many markets in the world, and from Japan to the United States to China. So I want to ask Ravi to come in and speak to us about that place. But I want to just say, these are folks in the room who I had confirmation. So a lot of, I missed out a few logos. My apologies, we'll make sure we add them in. But I think it's a phenomenal thing of having over 30 partners in this room. If you look around, each of these partners are leveraged engagements and channels for us to get amazing visibility to startups that we all want to curate. Each of us have our differentiation, so maybe we start talking to each other even more so. And so Ravi, over to you about how to accelerate ourselves.
Okay, great. Thank you, Naveen. Let's go back to the logos. That seems quite good.
Yeah.
Okay, so thank you very much, Naveen. I'm Ravi Narayan with Microsoft, and I think this is phenomenal that we have gotten ourselves together again. 90% of the people who showed up for the first time have come back again and continue this cadence of meeting and the regimen of getting to learn from each other and build the ecosystem to the next level. And the reason it is important is some of us, like us at Microsoft, we actually began the journey 4 years ago. And it was even then at that time kind of sexy to become have an accelerator. And we decided to set roots in Tel Aviv, Beijing, and Bangalore. And that was the beginning of our accelerator journey. Since that time, a lot more corporates also decided to embark on that journey. The interesting thing is, while there was a clear understanding of what we wanted to accomplish, which was get into the startup space, it was not clear anymore beyond that as to what we wanted to accomplish with the startups once we have gotten connected with them. And I think some of you have begun the journey, and you will come to that inflection point or that juncture yourselves, and then you will see that it is interesting that you have built an accelerator by hook or crook, by funding from various different places. And we have taken a bunch of very good startups from the ecosystem and accelerated them. As in, they have become more capable, more fundable, more viable, and then they kind of move on. So clearly, the startups are enjoying this journey because they come in touch with the accelerators. But what does the corporate, which actually put the accelerator together, get out of this? And if there is a fund that is actually sitting behind this, I think there can be a notional understanding of, okay, there is a deal flow, maybe a differentiated deal flow that you're bringing to the accelerator, and therefore the corporate gets to enjoy the benefits of seeing some companies earlier on, maybe getting under the hood, understanding where they are, what they're thinking, and in the process of maybe helping them on their journey, maybe also get some due diligence done. Get to know the founders better, the technology better, the markets better, and so on and so forth. But if there is no fund, it is more about just getting to know. Then actually, we need to go back to what one of my colleagues in London was telling me. So he calls that the petting zoo. As in, you just bring in the startups, and your senior executives in the company get to come and get to meet some startups. Get to feel them, touch them, and that's it. So if that is all we are going to get out of that, then there is not a whole lot benefit that is directly accretive to the corporate that is funding your activity, right? So it's an interesting place to be. So you have built a successful accelerator, you have brought some of the successful startups, and some of these startups, after they are in our accelerator, shows up in your accelerator. So there is a whole lot of this going on, right? So I know at the end of the day, you can't stop what they do, right? But you definitely can make sure that when you do have these connections with them, that there is something that is clearly an outcome for the corporate. So first thing is, I think it's the corporate that we need to be very mindful of as to how do we continue to bring value to them. And on the other side, it is the ecosystem. And there's a lot of the perception about the corporate that actually developed or gets fine-tuned with the advent of the accelerator program or the venture program, whatever it may be. Because people begin to perceive the corporate in a very different way. Oh, these guys are working with startups. Oh, this is great. Startups have a beeline to somebody very important in the corporation, which can actually may benefit the startup in a big way. So the perception, definitely, the needle moves on this perception side. So it's definitely good, and if that is the end goal, I think you will all accomplish that very well. The VCs get to be very close to you. The other incubator accelerators will also draw close to you because they also want to draw from the corporates. So definitely these are things that are happening good on the ecosystem side. But on the corporate side, we found over time that after we have built a successful accelerator program, is that we needed to move from a slightly early stage to a later stage. And the reason we did that, we said, if these companies actually have real products and real customers and use cases, we actually can connect them to our own sales and marketing team. Of course, it takes a while to get them indoctrinated into the startup world, our sales people. But when they do get indoctrinated, I think the magic starts happening. Because they have the ability to tell a different story. They have the ability to bring in new use cases that they were not able to do before. And they happen to speak a different language. And they are no longer in the language of 5 years ago, which they were selling their products. They're actually selling different products in a very interesting way. So definitely, clearly, the sales and marketing organizations of the corporates have to be bought into this accelerator program to make it successful. Of course, there is a fund. We have something called Microsoft Ventures. So we are clearly giving them differentiated deal flow. They are beginning to see some companies that were outside of their normal horizon, and they're beginning to see these companies. And then finally, the product, the technology groups. If it's a tech company, obviously, to understand the new developments that are happening, the new ways the startups are adopting technology and creating something out of it is absolutely phenomenal. So these are not easy things to accomplish. It's one thing to have set up a petting zoo for the executives, but it's another to actually operationalize it at the fund level, at the sales and marketing level, and at the product level or the technology level. So it's something that needs to happen. But we also have found that this business is not a very clear business model for any of us. And there are certain things that we need to do collectively. There are collective resources, like the 4 things that Naveen mentioned, in the areas of mentoring, in the areas of introductions to customers, introductions to investors, and certain best practices. So these are something that I feel, as much as we feel that each of us has our own dictates from our mandates from our own corporate organizations, but at the same time, there are some of these that really need to find critical mass to actually spark into something much larger. And therefore, the more we can do this, the better off we are. So when Naveen brought together the second version of the Incubator Accelerator Meet in June, I was quite surprised to see so many people, first of all. And I'm even more surprised to see most of you actually coming back again. So I think we are on to something. And while we have now the discipline to come together and have these conversations, I feel that we need to crack those 4 things, because the common resources is something that really is going to help us all. Because each one of us to cultivate the mentors, cultivate the best practices, all from scratch, is not really necessary. And we feel that even though we are a part of Microsoft, we have been very open to working with several of the other incubator accelerators to share with you what we have learned. And there's no intellectual property per se. It is who executes the best. And that's what we think we can offer, and we would be happy to, now here we have provided a platform, but if, in addition to that, if there are certain seeds of discussions that we can get going in the forums that Naveen has created, happy to do that. And at the same time, we also feel that on the business side, Hemant can talk to you more about it. Hemant is from TCS. We have found that we probably have common goals in terms of getting into new markets and getting into new customers. And it is not one corporate, even however large we are, to be able to solve the new products and new services of the future. So sometimes it just makes sense for us to come together and actually find ways to not just bring our own customers' needs to us, but at the same time gather the best of the startups that can actually solve this and find a way to build those solutions together. So it is a combination of startups, it is your own technologies, and at the same time, some other integration work, some more customization work that has to be done to make it one integrated solution. So we call this directed acceleration, as in there is a certain acceleration that we are trying to accomplish through the means of startups. So these are some of the things that we are beginning to explore, and we are happy to explore this because this is definitely going to meet some of the expectations that our corporate organizations will set on us. So this is what I found through all the accelerators that I work with across the globe, and I thought I should share some of these thoughts. And if we are able to accomplish some more meaningful action items, meaningful agreements in this particular meeting, we would have made substantial progress. Thank you very much.
Thank you, Ravi. I know there's a paucity of time, but so we will just bring in the voice of the customer first because we believe the customer is first. And I thought there are two people I want to introduce in the room, and I'm sure you should talk to each other, but on my extreme right, at that side, Ankit, say hi to everyone. So I call him the one who got away. He got away for the best purposes and went on to build a company that was immensely valuable, sold it, and his journey of why he chose not to be an accelerator. I would like you to share that, but first I want to make sure we always follow the money trail. So we're going to go to Priyank. He's a principal at Axel Partners. Priyank, I invite you here and you can take the stage here. So, and Priyank will share with us what is deal flow and what are startups and accelerators should help, and vice versa.
Hi guys, so just a very brief introduction on Axel. I already mentioned we managed close to $1 billion of capital in India. We've invested in some 110 odd companies in India in the last, our current active portfolio is 110 odd companies right now, which we've invested in the last 10 years. And 60% of the portfolio would be on the consumer side, 30% would be SaaS and enterprise, another 10% would be healthcare, education, and other IoT and analytics spaces. And I'll talk about why that is important. And so just to give you some sense, like a fund like Axel, in the India VC market is actually quite shallow in terms of numbers. And I don't think there are as many VCs in India as the number of accelerators there are. So it's a fact, right? So the guys who can write a $2 million check for your startup, which is coming out of an accelerator, is probably a handful. Like you can't do the number of figures. So we as Axel see close to 3,000 to 4,000 startups a year, and we end up funding out of those 3,000 to 4,000 startups from 20 startups probably. And 20 is on the higher side. If we do 20 startups in a year, that we feel bad about it because that's too many companies for us to manage. Right? So basically what I'm trying to say is that we have a very big deal flow, and if you have, let's say, 30 or 40 accelerators sitting here, each of you working with 10 companies, you already have 400 companies sitting in this room, and only a handful of those will get funded. So if Axel is funding 20 companies and there are 10 or 15 other VC funds in India which are doing Series A right now, or 20 funds, 400 companies they are going to fund, and they are probably going to see a collaboration, like all VCs including would see close to, let's say, 6,000 or 7,000 companies, assuming that we have only half of the coverage, right? So only 400 companies a year are getting funded in India, and that's the problem, right? So there are too many companies, a lot of accelerators, and everybody has a very differentiated view of what they want, but if you would see how VCs tend to behave, we end up investing in the same area competitively, tend to follow a wave. Last year was food tech, this year is fintech, hopefully next year will be IoT, I don't know. But that is the challenge for any accelerator to also differentiate within that space. With respect to working with accelerators, we've tried working with a lot of. Microsoft is obviously very close to us. We work a lot with them. What that essentially means is, it is some sort of a petting zoo right now for us. Right? So we have not ended up actually funding. I'm being very frank here, right? So we did this thing 2 years back where have we actually given money to any startup from an accelerator? And I think CII from IMA came out to be tops. We have funded 3 companies of theirs versus any other accelerator. That is changing very fast. I think we also run our own incubator, by the way, which is after company gets funded by us, they go into it. It's not an open incubator. But I mean, nothing to take away from Microsoft. I mean, I think they've, like Ravi said, they've learned that, and we have also noticed that they've gone from the early stage to later stage, and it helps us. The problem which has been for us to work with accelerators has always been, we always find a mixed signal between corporate value as strategic versus we as financial investors. We are always confused. You know, what is the value? Why should I fund this particular accelerators company? What is it? Because we have our own goals. We know that, for example, we start from our investment decision from our market. Is this market where something can be created, which is $1 billion, $500 million, can get exited? Can we exit it in 10 years? But majority of accelerators which we see do not start from that goal. They start from a goal of, is this a strategic value to my corporate? And in the short term or long term, is it going to add to my top line or bottom line? And you might also be incubating some interesting ideas on the side. So the financial goals are not necessarily aligned with the way we think of it, right? And that creates a dissonance. I think actually Times Group has done a pretty decent job. And there is a reason for that. I think and I was just thinking about it, so if you look at their portfolio, they've done a lot more consumer companies, essentially, right? And India's VC ecosystem has tended towards 70% of the companies get funded in India are consumer companies. By consumer companies, mobile apps, e-commerce companies, and the sorts. Whereas the majority of the accelerators sitting here tend to be on the cutting edge of technology or would like to be blockchain, IoT, analytics, retail, and that traditionally has not been a hunting ground for most VCs in India. And the reason for that is most of these companies don't tend to have a good BD, or Indian VCs can't see how that market fits India market. So they're not enough adopters or customers. So I think the accelerators, as an accelerator, you can get those companies to have good BD, to get customers for them, get to a stage where as a VC, we get confidence that, okay, for a company like this, there is a market. If not in India, outside of India, and since there are most of your very, very big corporates, that would really help. I think that helps a lot because for cutting edge technologies, it's just hard for getting funded, right, in India. Because majority money goes into consumers. If you look at all the unicorns in India, are all consumers, except for the music one, right? So that, I think, it ends up happening. I think the third thing which I've seen a big difference between when we talk to our US colleagues and US partners about how they work with accelerators, and the accelerators I'm talking about, the likes of Y Combinator versus the Indian accelerators, I think the big difference is pitching. The amount of expertise or the amount of time the US guys spend in helping their startups get to a level, how to pitch to investors is just phenomenally different. I was spending time with the partners in Y Combinator who had come here, and they've created different things. They've created a paucity of seeds, they've become a brand in themselves, but that is one Y Combinator, right? So that's quite interesting for me that, I think what ends up, the reason that follows is majority of the you guys work at a very, very early stage. So the founders are not very able to articulate clearly what they're building, right? And I think that's where pitching helps a lot. But I'm being prescriptive here, but just my 2 cents, right? So and that's what ends up happening there. So the founders are able to articulate it much better if you just help them understand it. So I think there's this whole race between should we build the product better or should we build get traction or should we pitch better. I think at least from a Series A perspective of $1 to $2 million, so we write a typical $2 million check. We can do anywhere as low as $500,000. At that point of time, we are basically looking at the idea and the team. And the prototype need not be there. Some of these things not necessarily need to be there. So if they can articulate it well, if they can say these are the experiments you can do, I think that is good enough for us. Unless it is a enterprise or international market startup where we want to have some sort of proof points coming in. I think that's the big difference that we see. Yeah, I think so. A good example is bank accelerators. Right? So lately, Axis Bank, Yes Bank, a lot of bank accelerators are coming. We are also very excited because we have invested in a lot of fintech companies. And we will try to collaborate, and that's a good example of a VC is interested to invest in that space, and we see a corporate from that particular space launching their own accelerator, and we say, oh great, now if I fund a startup, or I can go there and find those startups which are validated by the banks. I think, unfortunately, what has happened is, I think the corporates are also into evolve. So it comes down that most of the time it becomes a pitching session to the bank senior management, so corporate senior management, and basically they might try out some experiments, but they don't fully commit to it. So it leaves the startup hanging in the middle, where they say, we went to that particular accelerator, they said they will do this, and we say, so is there an actual deployment? They say, no, they say, why don't you get more customers outside, and then you prove it, and then we'll come back and accept the technology. So it leaves us, it gives us a very confusing sign that they went and the bank or the particular corporate told us that senior management will spend time with them, validate the technology, and but it didn't end up happening. So it leaves us, in two phases, that we might as well be any other startup outside of that accelerator. Right. So that's the other one. Yeah, I think.
Priyanka, I had a question for you.
Yeah.
What percentage of startups that you've invested are from accelerators inside the group? If you take a portfolio of 100%,
right,
and that's what you told me, right, downstairs, I just thought it's a very important wake-up call for all of us. So what percentage?
We have done 230 investments till 120 and 30 investments till now. 3 or 4 are from accelerators.
So assuming that that's a journey that was yesterday, and we're looking at a journey tomorrow, and amongst us, assuming there are 10,000 startups in India, 7 to 10,000, investors, which report you look at, and all of us screen a couple of thousand startups for applications, and you also look through a startup application process of around 7,000 startups at least in a year, and out of it 4,000 you do due diligence, you reach up the stream, and you reach 20 finally in the final invest. Is there a way we can know your criteria that you look for an invest as part of your selection process? Maybe we should talk about our application processes, and maybe there's a convergence point where maybe we ask the same data on both sides so that we help them come to that point, or we help you take them upstream.
I think the one filter which you can see, which you can put, is just the market size. Unfortunately, 99% of the times, startups don't understand clearly the concept of market size and can't articulate it, and we just, so majority, like 99% of the times the startup gets rejected by the market size. And let me clarify that, right? So, our market size for us, the way we see it is this company going to be a $1 billion company or not? Right? How do you decide whether it's going to be a $1 billion company or not? So let's do the math. Let's say 10 years from now, this market is a $3 billion market. This is a very successful company. They'll get 30% of the market share. So they're a $1 billion company, so either that way you look at it, or you look at it saying that this company is going to get a 20 to 25 times EBITDA multiple, or a 2 times, 3 times the revenue multiple, whichever way. They have to be $1 billion, which essentially, if it's a $1 billion company, 3 times EBITDA multiple, they need to have a $300 million revenue. How will they get to $300 million revenue in a market which is, let's say, $100 million? No, not possible. Right? So even if it's a $100 million market, then it has to be growing 100% year on year. So those are the things which we need to figure out, and that's the maths which we do. When a company comes and pitches to us, the first thing which we go and do is the market big enough for us or not? Like, so yes, you have to have comfortable with the team. That's the first question. But the second question you ask is the market big enough or not, right? And majority of the times, companies fail in that, right? So that's the big problem, right? Or if they will say, okay, the market is big, but it's not profitable. Like, so if you look at a large number of companies that are doing hyper-local deliveries, for example, very difficult. It's a very huge market, but the margin structures are very bad. Right? So what that means is, let's say if you have 5% EBITDA profitability at that point of time, 10 years down the line, you will get, and you have to build a $1 billion business, you still have a 28x multiple. So for a 5% EBITDA margin, you'll have to have like $400, $500 million revenue to be able to be valued at that kind of level. So that's the problem which we see. Like if it's a small profitability, it will have much bigger markets. If it's high profitability and high growth, then probably we can fund. But majority of the times, that is where the problem is. And I know I think it's also at slightly odd because you're also doing cutting edge. But unfortunately for us, when we are investing today, that is the metric which we apply singularly majority of the times. And the third metric I think is competition. If we have funded something already, we will not go and fund a competition for that. I think when accelerators send some of their companies to us, they don't do that check. So it unnecessarily sometimes create a the companies feel bad. They send us, and the first meeting, I just opened and told my pitch, and the investor said, sorry, we can't talk to you because we have a competition. Right. So that's the other thing, this background check. That's very easy to get. I mean, you can just send us the name of the company, what they do, and we can tell you, sorry, this is like a competition.
Thank you. Priyank, any questions? Priyank, or you can find him on LinkedIn.
Yeah, I do. Hi, Priyank Shigam from Cisco. How does your investment model vary? Are you following pretty much a global investment model, or are you tailoring it for India and the region?
So we have an Indian investment team. So the actual funds are, the $1 billion is only for India. We have 9 investment professionals, 6 partners, 3 principals. Then we have a London office and we have a US office. They have managed it. So globally our fund size is like $4 billion. Then we make investment decisions locally. So a lot of times our US partners, for example, have this discomfort that these businesses are not profitable in India. And we say, it takes time. So that's why the decision making is local, that we have more comfort, we have more knowledge than them, and we decided ourselves. Axel is very peculiar in the sense we pride in ourselves that we do invest in companies started locally but do global business. So we have a fresh desk for our seed investment. And Zenoti is another one, is for our seed investment, and we like to do those kind of businesses because we believe Indian entrepreneurs building for global markets, especially English-speaking markets and software, are as good as anybody else. So, thanks.
Thank you. So put your hands together for our friends. Thank you, Priyank, for being here. Definitely take the conversation forward. Hopefully set.
Sorry,
we had a cutoff at 4:15. Yeah, we are exactly on time for that.
But yeah, please reach out to me.
You can find me, so you can reach me. So I want to invite the next voice of customer, keeping in mind the voice of customer at first, is Ankit Gupta, the one who got away. Thank you, Ankit.
Thanks a lot for inviting. My name is Ankit. I am one of the founders of a company called Pulse. It's a news reading app that my friend, co-founder, and I, we launched when we were studying at Stanford. It was a very simple app to read news. You put in a lot of your publishers that you really like, and you can have a very visual, efficient way to read news on your phone. And we started in 2010. It grew really fast. We got a lot of really good feedback early on. Steve Jobs actually talked about it when he was at Apple. We raised close to $10 million. In 3 years, we grew from 0 to about 30 million downloads, and we got acquired by LinkedIn in 2013. And so since then, we've integrated Pulse into LinkedIn. So now if you go to the LinkedIn website, you see a lot of news that's basically about Pulse. So that's kind of a quick snapshot of what we built. And I think Naveen asked me, we started from Stanford when we were still master's students, and we actually got into an accelerator at Stanford, but we decided not to take it because things were just moving really fast. And I think what I was asked was to just share a perspective from a startup's perspective, what are some of the things that help Pulse, and probably some of the things that could help your companies as they get incubated. So I thought I would share just like 3 stories very quickly about things that I feel were very, very lucky and which helped Pulse a lot to actually grow that fast. I think the first one, when we started Pulse, we did not have an office. We were just working out of coffee shops, essentially, in Palo Alto. And when you're at a coffee shop, we're coding at the coffee shop. We had our iPad. It was an iPad. It started with the iPad at that time, so it was an app on the iPad. And we would literally code there, and there would be people coming around us to kind of check out what's happening. We would play around with the iPad a little bit, and we would show the iPad to them. And we would just preload Pulse. We would open the Pulse app and just give it to them. And we'd actually see them use the Pulse app. And we would see what the issues were, and then we would go back and code more, and then next day we would take it back to the cafe. and just happened to be the case because we didn't have an office. But we did a lot of really fast user testing that way. And it really helped us improve the product at a fast rate. So we actually started developing the app the day the iPad launched, and within 5 weeks we had an app on the App Store, which was actually a pretty good first version. And so a lot of this rapid prototyping helped us understand what the problems were. I think we continued that user-centric culture when we grew the company. I think that's one of the things I see Indian startups struggle with, is that they're actually moving really slowly because they're not able to get fast user feedback. And I think that's definitely something you guys can help with. When we grew Pulse into a bigger company, we faced a similar problem where we got a little disconnected from the user because you're sitting in your conference rooms whiteboarding and you come away from the user. So we decided to initiate a program where, regardless of whether we have new updates or not, we would just bring users in every week. We would just have 10 users, we would recruit them off the Craigslist. They would just come, they would just show up, and we would keep testing regularly, whether we have new things or just old things with more feedback. And so there's a lot of ways you can bring users in, but that helped us a lot just by being in the vicinity of users. We would grow really fast. The second story is very interesting. When we launched Pulse, we actually got featured by Apple. Steve Jobs talked about it at the Apple Developer Conference when he was launching the iPhone 4. So that was a high. And the same day, New York Times actually sued us and kicked the app out of the App Store. Let's talk about highs and lows of entrepreneurship. The same day, your hero talks about your app, and then you get kicked out of the App Store, so no one can even download it. So we were like, okay, we're done. It's New York Times. We can't really fight it. Let's just go home. And we talked to one of our professors at Stanford, who was one of our mentors. I think the importance of mentorship that can be provided to startups. He was like, dude, you guys are crazy. This is probably the best marketing that has ever happened to you. Who hates New York Times? In terms of Wall Street Journal hates New York Times. And so he called a friend who's a reporter at the Wall Street Journal. She took an interview, published the entire story. We did nothing wrong. So published bare facts. It was almost like a David versus Goliath story. And it was published on the midnight that day. The next morning, the Pulse versus New York Times story was actually the #1 story, tech story in the Valley, even above the launch of the iPhone 4. And so obviously that afternoon we got back into the App Store, and that day we got 30,000 downloads, and we were charging $4 for the app. So essentially we had an angel round.
A bad story of the angel round.
Angel round by New York Times.
Well, courtesy of New York Times. So I think mentorship is really important, and in this case, we started Pulse in the Valley, and we just got really lucky because at Stanford you just have an amazing network. And I think that's something I see some startups struggle with here also, is like how do you connect to the right person? Because you probably need to know 1,000 people to find that one person who knows that one reporter at Wall Street Journal who can actually be so effective. And I think startups here could really benefit from that. So the third story is it's very different. We started Pulse, my co-founder and I, we were actually we did a class project together. And we realized we worked really well together, and so we decided to start a company. And in that class project, we actually had a third partner as well. His name was Albert, and the three of us did this class project. It was great. And then Akshay and I took a different entrepreneurship class to start Pulse. And we kept in touch with Albert. And when Pulse launched, I was the iOS developer, so I built the iOS app. Akshay was the designer. And the app got launched. It got 30,000 downloads. It was at a pretty good pace. And we realized very soon that we have to move to Android. Otherwise, anyone can copy our app, our idea pretty easily and launch it on Android. And Android was a pretty, at that time it was actually not as big as iOS in 2010, but it was growing really fast. And thankfully, Albert was an Android engineer. He knew how to do Android. Super, lucky coincidence. So we recruited Albert. He left his job. He joined the app. He joined the company, and within a month we had an Android app. As if you kind of look at the trajectory of Pulse, the Android app was actually really instrumental in helping us really become the best possible version of the app, because then you can download it and platform. We got an acquisition offer from Google because of that early on. So a lot of good things happened, but I don't think they could have happened if we didn't really know any Android engineer in our network, and if it would have taken us a month to hire an Android engineer, or maybe even 3-4 months. So I think that was another thing that was really lucky for us. All of our early hires came from Stanford or our networks nearby. Another thing I see startups struggle here is to just hire good people. I think something you guys can help a lot with, because the first few hires are so important, and they just need to happen really fast. Like when I think about I need an Android engineer, they should just show up. And there's so many people working in jobs in India that are frustrated by their big company jobs. I think they would be really happy to come work at startups if the match is able to be made. So it just got really lucky, hired our first engineer, and I think those are kind of the 3 anecdotes that I thought might be interesting. Is around kind of getting a lot of users for startups, getting employees, and then getting that one right mentor that can really help fast.
So, what I wanted from you, Ankit, was you mentioned about getting sued and raising angel, about finding the right mentor, and then finding a classroom friend who also had different skills. Now that's providence and a lot of serendipity and also a lot of your belief of where you are. But you also chose not to go to an accelerator. And this was at a time when the Valley had a fair amount of engagement going on, with a bunch of companies happening. So your insights on why you chose not to. It's not a particular accelerator, so I don't want to mention the name, but just the context of what is going on in your mind, because that's the fluidity that startups go through. When to join, should I join, will I join, not join, that battle in your mind, why you chose to walk away. And an addendum question is, if you have to choose to go back, what would you go back for? Because now you've been there, written the script, and now.
Yeah. So I think the biggest question for us was whether the 5 to 10% was worth it. If we had actually launched the app and it was failing, not doing that well, we might have considered it was worth it. But at that time, the app was actually doing really well. People were downloading it, we were getting a lot of good feedback, and so we knew we were able to continue on that momentum to not dilute ourselves. But I think another kind of point related to that was, I think sometimes you get slowed down by going to an accelerator. Because there's a little, it's like, I guess you all know. I think every startup needs different things, and it needs to happen very fast. And which is why it's actually really hard to make an accelerator. But I think a startup that's failing can afford that time. A startup that's actually doing well cannot afford that.
Sorry, quickly, I think you must know the joke about Stanford being an accelerator with a football team. So, if you're already at Stanford, you might be slowed down. But if you're not...
Yeah, so I think, actually, even at Stanford, there's very few good accelerators. I think the accelerator just happens to be the campus because there's just so many people around. I think by slowed down, what I mean is like there's a lot of ways where you think that you add value, but you actually don't. We saw that even in our entrepreneurship class. All started from an entrepreneurship class. And there are very stupid assignments that we had to do, like, come up with a pricing model, come up with what your market looks like. There's just so many things that you actually don't need to do. As long as you have users, as long as you can make a good product for them, and as long as you can grow your user base, you're good. So I feel like people try to help you. They're not trying to be helpful, but they try to help you in ways that you don't need help. It's kind of like a model that is being forced on you. But it's like, I like it. So like even when I invest, I think there's a lot of times where I get asked a lot of help, and I encourage that a lot. But then when that happens, I try to really spend a lot of time. Like if that person really wants entry into LinkedIn, like I'll bang on our doors and make sure that happens. Or if they're really struggling to think about growth, then I'll try to spend a lot of time with them, or I'll try to like hook them up with a lot of people to get that to happen. It's very specific for different companies and very timely. 99% of the time, they don't need it. So you get slowed down in that 99%.
So you're an investor too, right now? The journey of being an entrepreneur, an ideation student, a believer, an exit. So I want your insights on two perspectives. Generally, the typical round is let me go IPO. That's the, every founder's dream is I'll ring the NASSCOM bell, right? You chose to be part of the LinkedIn journey, and that's a personal journey which you had. Could you share a little bit about that? Because the reason I'm saying this is most of us who work in the accelerator world try and take upstream, and the upstream could be an investor or a customer who will do a POC or give a deal. We never thought of a customer who would buy you out. You know what I mean?
Yeah.
Some of us have thought, but I think that's a different perspective to look at exits and options and unlocking value. So that your insights on that. And the second part was about if you had to go back and invest now in companies, which would you go to?
Yeah, I think that's both really interesting questions. And we had to deal with the first a lot. So I think there are three exits for a startup. You can either be a lifestyle business, you can either get acquired, or you can either go IPO. People actually miss the first one all the time. But you can be a pretty good private company, profitable, and really have a business. When Pulse was initially launched on the App Store, we got advised by our mentors to charge for the app so that we can know where the value lies. Whether when you put a price to it, you know whether it's valuable or not. We charged $4. It turns out a lot of people downloaded it. So we were actually profitable from day one, and we didn't need to raise money. And so when investors, we started talking to investors, we asked them why we should raise money. And we actually got a lot of advice from both sides of the table, people who had built good, profitable lifestyle businesses versus people who had built huge companies. And we decided, after talking to a lot of people, that we did not want to build a lifestyle business. We actually wanted to build a massive company. And so we made the app free and raised a Series A. So I think that's a good thought process to go through. You should think of it as default, that you don't want to build a lifestyle company. And I think the second jump comes so for us it was when we were raising our Series B. The choice was, we already...
And it's very interesting because many of the learnings there are the conversation we need to take forward, and I thought we could go here. So I'm going to go straight into the study, and I'm going to just say the facts. Okay, so I'm stating what your data is.
One round of applause for Manishri for putting together.
Thank you. In the process of trying to keep time, one becomes, because the objective is I want to make sure you all have a discussion, because you're not coming here to actually listen to us. This is just context for the discussion, so we hope that that's the main conversation. So big thing is, I'm going to say this is the analysis of what we've shared, and the good part about big data analytics is Get4Eyes did this. So B2B appears to be our sweet spot amongst us in this room. A bulk of us focus on that, and B2C is okay, but B2C is also a fair amount of flavor. But what's very interesting, there's no B2G or B2G2C. It's a business to government to citizen services, and we just talked about Aadhaar. And we talked about citizen services, biometrics, last mile connect. While we might travel to the fintech flavor, building solutions that will be accessible, because as the government is looking at it, we're not seeing that. So it's an opportunity for us or a problem. I'm just stating that we have ignored that in the room. The second is the key verticals we're focusing on. We've been focusing on enterprise solutions, BFSI, e-commerce, software products, and retail. It has nothing to do with some of the key sectors which have been called out from markets that are growing. There is, of course, retail and e-commerce that's constantly growing. Retail is a very big area. Health tech is not emerging. BFSI is there. And edutech is not there. So maybe an opportunity for us to focus on edutech. If anyone is not interested or has been there, maybe it's a conversation for us to focus on it because it's an area of area. The other area which is there is, there was a bunch of respondents, a little lower, but I didn't call that out, is on agri-tech, which is there. It was very interesting that I found 5 respondents interested in agri-tech and therefore social impact in some form. Maybe it's an area we should collaborate and partner with Deshpande Foundation. So I just thought that's an area. Our sectorial focuses, while our vertical focuses on BFSI, retail and related, our areas of tech are very correct. We are exactly bang on the area of IoT, data sciences, VR, AR, productivity. These are spaces that are emerging. If anyone, I'm sure amongst us we have the expertise across the room, across the tech players, partners, as well as industry players who have been building our solutions at Accenture, TCS, everywhere. But I think these are the areas. So this area had a greater fitment towards the landscape and where startups are coming from. The stage of startups we focus on. So this was very interesting, was very right with where Priyank, because your survey came in last night, so this was, but we focus on boot stage, angel stage, and a few of us focus on the growth stage startups. Are we focusing on a car that's not been built, and are we accelerating something that's not able to move yet? It's just a question. I'm not stating something. Maybe where we are at boot and idea stage, they're just coming together as products. So acceleration, maybe the engagement should be more consultative rather than acceleration. Conversations could be there. Because a lot of that is why the VCs are believing we are focusing too early and therefore it's not the right deal flow for them. What support do we give our startups? So what's very interesting is the key support area we all called out is mentoring, deep subject matter expertise, assuming that because we come from corporate accelerators, domain expertise of the corporate POCs will be the, and go-to-market support, which is very nice, right? So we give all these amazing support and we are all actually on par with that area. What is our success criteria on the flip side has a very different view of it. We give them support in go-to-market and mentoring and deep advice, but we expect our definition of a startup success is funding. We're not helping them to get funding, but we feel that that's the criteria number one amongst us. That a startup is successful only if they got funded. So maybe we are focusing on something and we're giving us something else, and we are expecting something. So maybe we need to recalibrate what our expectation of a successful startup should be. The second area, of course, is we have looked at growth in 5x customer growth. So that has been in line with what our expectation of criteria is. But predominantly mentoring for investment versus mentoring for scaling is different. Our challenges. 2 areas of challenges that have come up amongst us have been mentoring and monitoring of the startup and funding support. What's very interesting is optimal utilization of government issues and resources has not come out as an issue at all. So all of us doing amazingly well, making sure all our startups taking the Startup India program benefits, the amazing machinery of the government that's doing some amazing work. Are we leveraging that? Are we as accelerators engaging and leveraging that? We are taking equity in companies which may or may not be notional companies, right? So maybe what is our survival model of those accelerators? If your model of survival is equity, and if you're writing off 2 out of 5 startups in e-commerce fail, and you said right in consumer B2C 2 out of 5 fail, and 20% is a failure in B2B, then which are the sectors you're focusing on? Should we be talking to the government? What should be our asks? Because if you're seeing a huge push from the government, and we're seeing China being a large player, and to the comment that there is a lot of funding capital there, then are we not accelerating ourselves by not engaging with the government and the stakeholders of the ecosystem? Just a thought.
Just a follow-up question there. Do we have expertise here that knows how to work?
We'll just finish this. I think the discussion is for you all. I'm just.
That's a good question. We should deliberate.
Yes, exactly. And the thought was that this is the thing. This is where the opportunity is. This is where we see ourselves. We should talk now. So that's this last slide, last 2 slides, and the verticals and stage. Very interestingly, we are all focusing on early stage, and the sectors are emerging as into BFSI, biotech, some of the key areas which you have called out. But if you look at the sector stage view of it, which is very interesting, is data sciences, IoT, and productivity. So are we backing tech product believers without business viability, and we're going to retrofit our business viability on them? If you actually look at it, we're all seemingly, amongst all of us, 80% of us believe in IoT, big data, ML, and VR and AR. And we're talking to amazingly tech smart people like Ankit who are, on the edge of it. Are we prepared for that journey, which we want to focus on? Because we want this focus. They are focusing on it anyways. But are we going to add value to their journey? Because they are going to be transformative companies, because they are building solutions that even probably we haven't imagined yet. So how do we imagine something for someone when we haven't seen that story before? I don't know. It's a conversation. And the interesting part about it is, if you look at the mix between, and this report is available for you all, I'll share it, and you can pull the data the way you want, and the best part is it's anonymous. I don't know who's responded to what. So, which is very interesting is, if you actually can see interesting collabs, there's a BFSI and there's an enterprise SaaS, but I would be more interested in seeing BFSI with IoT. What is the IoT with BFSI intersect that you're seeing startups in? I don't know that use case yet. So some interesting respondents: health tech, software products, retail, enterprise, and BFSI. And the sectors are. So you actually do a heat map from both sides, and you can see some very interesting trends that are emerging in sectors we are. So I want to stop with that with one last slide to just give you a quick view. Our current batch size amongst all of us is around 8, and all of us on an average have graduated around 21 startups. So we are roughly around 1.5 batches old. If you take the oldest to the youngest, we are amongst us. So amongst us, we have collective wisdom of running 2 cohorts at least, or 3. That means each of us can help each other. That's a very important thing. So what I wanted to do was introduce very important partners in this journey, and take the conversation from there to the next part, which is the discussion we should have. So we have around 30, but we could go to around 40 minutes to 45 minutes. I think we should have a good discussion. I would invite Bala to lead this, and with Prasanna and John and Srini. So amongst us, we will have a discussion on various areas that we have dwelled on from now. We've heard insights from across everyone on the board. We've looked at 4 areas of mentoring. We've got leaders there in that space. So, just for refresh, who are the partners who did that? Swat, you were leading the mentoring conversation. So you can give an update in that, and if that's part of the discussion. Venkat and Sandeep was there last time from a customer connect perspective. We had best practices by Srini and Hemant, and T-Hub, Deshpande Foundation were looking at funding. So social impact organization looking at funding support best practice. So there are 4 different. And I also had some initiatives like Hemant looking at setting up an articles of an association for us, a couple of key initiatives, that are some initiatives. But broadly that was what we had discussed last time. So the thought was, we are here, we've heard the inputs of a startup, we've heard the inputs of a VC, we've heard the inputs of a landscape, we've heard our inputs of our own self. Where do you think we should take ourselves? Because we are collectively crashing, as we call it. We all are swimming in the pool and a lot of water is going out. And the question is that, can we collectively come together, because we are also frugal companies or individuals and organizations, and we really need each other's help. I see broadly a couple of key areas which we should, I call it collaboration as a pillar. We should start collaborating. There's a WhatsApp group, but I think we need to talk and help each other. But we need to also collaborate on processes. We all are going to the same investors, same startups, time and again with different application processes, creating a lot of visibility for ourselves, but maybe noise for themselves from the startup's perspective, because the startup does not know which way to go, whom to apply to. It's like what Ankit said, and I wish, it never happened, but it happens, right? Ankit said, it's when you have time on your hands and you're going nowhere, you go to an accelerator. I wish I'd never be there in that space. Because you understand the kind of startups that we are accelerating and investing time in, right? We want the right kind of people to come to us. And it's a very important question. We have got frugal resources. We've got principals at large companies or large people who are invested in our stake, in our journey. So can we come together? And I thought processes, collaboration, efficiencies amongst ourselves. All of us run demo days. How many of you don't run a demo day? So at least, if you roughly say around 5% out of, the whole room. So maybe there's a conversation for us. So I leave it to Bala, because I think the insights of where he comes from, of looking at it from Microsoft Accelerator and then seeing it from a consultative way, is the way the canvas, we need to re-architect our canvas. Srini, because he's built an amazing space, which is the model ship for all of us in India from incubator and space. John built 3 startups, built 2 accelerators, one went IPO, one failed as a startup. So, his entrepreneur perspective coupled with product experience of Bala's. And I think Prasanna, he's been coach incomparable for everyone, a lot of us. So I thought, can we together start talking and we start doing things together, that's all.
Thank you.
Thank you. Thank you so much. I think you can clearly tell Naveen's passion is in this space because he really worked tireless. He has his day job and then an evening job, and this was his night job. This stuff together. So thank you very much, Naveen. Thanks for bringing all of us. I think it's now time to open up and get everybody to kind of contribute to what you guys heard. Want to hear a few things about when can we collaborate according to you, and where is the need, where is the challenge that you're facing that we think we can collaborate on. Good to get some perspectives for you from the trade. Yeah. So, John, what do you think about it? Is there any? I think we can go around the room to get people to talk about these 2 aspects. We've heard a lot. Clearly, some themes are emerging, and it is already flowing from the previous discussion. Mentoring. Everybody wants good quality mentors. So that's one clear theme. Application process, part of it. Then investor relations. And now to add, I would definitely look at that. How do we work with government and policy, influence policy, if there is any policy requirement for us, and go-to-markets. So these are thematically 4 or 5 pillars that each one of us seem to be very common to each of our criteria of how we run our accelerator, how we measure ourselves, and how we show success. One more, the whole process of managing your cohort. That's another piece of it. So these are maybe 4 or 5 pillars. So if you were to say where do you think we can work with, where challenges, we could probably go around and then we can see how we can take the forward. What do you guys think? Okay, we'll start from this side. Last time we started introduction from that side. So,
one of the things I was thinking, what about going over what we talked about last
time? Yeah. So
any updates on that?
Yeah. So one area is, Srini, you want to go first? Just give an update on where we are from you and Nima.
So, I mean, first of all, he did a survey. Again, it was sent out to most people. I don't know if the new people were included or not. One of the things that we were tasked with last time is to explore whether to form an association for the accelerators. There is an association called ISBA, but that looks at government-funded incubators, their focus is very different to ours. And all that the government takes into account is what they say. And I can tell you they're woefully out of touch with what most of us want. So that was something that he did a survey. What were the results?
Well, it was unanimous. Most everybody said there is a crying need to form ourselves into an association. Nobody deferred. There were some who were already a part of an association, but they did want one created which is perhaps not for profit, which works for all of our welfare, etc. There was a set, and I'm not naming anybody, it's all anonymous. So there was a set who kind of felt would some accelerators derive an undue benefit? By forming an association in some manner, will some accelerators leapfrog the others? There were some reservations around that. But that didn't take away from the fact that every single respondent wanted to be a part of a new setup. Yeah?
And the only reason for that association was supposed to be so that we could share knowledge with each other and represent to the powers that be if necessary.
So as a second leg of that, and Srini's help as well, to form an association, what are the things that are required is another part that we went ahead. If the survey had put out results which were contrary to what we initially believed, as in people didn't want an association, perhaps we wouldn't have gone down that road. But since it was a resounding yes for an association, we went ahead and examined, and Srini has got a partner who perhaps can put this entire thing together for in terms of articles of association, forming a Section 8 company, registering it, etc. So these are some of the things that as a collective perhaps we can discuss and agree upon.
One of the things I would like to do is that given that there are a lot of new people who weren't part of that first meeting, just give an opportunity to the new people to say if they have any thoughts on this beyond what we've said so far.
Perhaps if somebody
is not there in the last meeting, try to understand what advantages the association will bring over an informal collaboration, which I guess is already happening through different tools. What additional thing will the association bring?
So I think it's not about an association as a company per se, although that is something that we were looking at doing. The idea was that, and to give a little bit of history and on a lighter note, this is something that came up from the very first time we met. It was my responsibility to do it the very first time. I didn't do it the first time, I didn't do it the second time. This is the third time. And it was only because of bandwidth, because as you know, we all are willing to do things and yet we're all overloaded with stuff. So that was when it's been happening, right? But the idea was that when it's an informal association, what we found is that people, again, they drift away. While we're in this room, it seems like a great idea, and we all say, yes, yes, we'll collaborate. But the truth is that once you get back to your daily lives, it doesn't happen. So if you have some kind of a structure with some kind of a hierarchy again, and it's not about positions of power, it's about figuring out, for example, regionally, can we all meet regularly and feed that up to an organization? That's why we thought a formal structure is better than an informal. And we've tried this with the informal, and what happens is nothing happens in between. Then we meet the next time, and again we're like, yeah, great idea, let's do something, and it's gone.
I guess that something must be happening between individual partners here, which you are not aware of.
No, I'm aware. So I would say the other way around. I happen to be one of the few that interacts with most people,
I agree.
But they're all complaining that they don't meet each other. So as a formal structure, it tends to happen.
So why don't we hear from Siddharth and
Mahesh also wanted to
Mahesh,
say
Mahesh, you had something.
It's different. It's different. Let's finish the association conversation then.
Okay.
I'd just like to add something on the association. It must have teeth to interact with government and make policy changes.
Actually, that is the
biggest one.
That is
what we
the
need.
It's like fair representation.
I think you need muscle to talk to the government and cut through the hoopla and chase and say, give us this so that we can then add value to the startups. I mean, Naveen had a very interesting thing. Why does any startup want to do business with government? That's the biggest opportunity.
Yeah.
And I've dealt with government in education and in healthcare. It's a nightmare. But that's where it's required. So to your point, Bala, I think an association will be the voice of 20, 30, 140 of us, telling the government we are the voice of the startup, help them help you.
I'll give you another data point again because I was involved with a discussion with the DITP on this Startup India thing. You all know that in theory there are benefits to being registered as a startup, right? In theory. There's two levels of registration as a startup. One goes through designated incubators that are all government incubators. The second one for tax benefits, which to be honest is the only reason that any startup wants to be registered under the government scheme, has to go to an inter-ministerial board, right? In the whole of the country so far, 5 startups have been registered as startups.
Yeah.
Because of this inter-ministerial board. Now, the data point I'm telling you is I went to a meeting with, there's no government people in the room. It's being recorded. Okay. I'd actually said this anyway to Ramesh Abhishek, and he knows this. One of the issues that they had was their definition of innovation. Okay? Their definition of innovation is built around patenting, deep tech, etc. So most startups that we know of don't apply. So I was at this meeting where they had about 25 government officials and 5 people representing the private organizations, including NASSCOM. I was one of them. And here are some of the suggestions. So the purpose of this meeting was, how do we get more startups to qualify as startups? Here are the suggestions that came back from government incubators. If they have more than 5 PhDs on board, they're a startup. If they're spending more than 20% of R&D on, their revenue on R&D, it's a startup. This is government incubators talking.
Below 50 crores is a startup.
Yeah, that's right. So our side is not being represented. So I was as the voice of dissent, at least, saying that these are ridiculous definitions of innovation. But it's these sort of things that we should be able to represent. And we're not being listened to right now.
So I may have a contrary opinion here. So on areas of potential collaboration, mentoring, funding for our startups, it's obvious we need to collaborate and we need to find a better method to do that. But if I look at the 140 size number of incubators / accelerators, we all come in different sizes and shapes. Some are Karnataka specific incubators, some are just like corporate accelerators focused on their own internal stuff, some are horizontal incubators, accelerators. We have each one of them, our expectations of what we want to do are very different. It's not clear to me if the association is formed, is there going to be alignment in terms of what the priorities are? Some of the stuff you talked about, government stuff, could be totally irrelevant for a good section of the incubators here, sitting here. I'm just making a point. So the collaboration and having a better method of engagement, absolutely I agree. Pooling our resources in terms of mentoring, etc., completely agree. It's not clear to me that if there is complete alignment in terms of priorities, expectations, that justifies the need for an association.
So I think to that point, I would like to see the areas of collaboration. At least we get some unanimous, some lowest common denominator there. We can build on top of it and then build variations. So, is there any subgroups which were looking at those thematics?
So before we get into that, right? So
Yeah.
can I make
Sure,
a point? So
please. Manish.
Association or otherwise, including the topic of forming an association, right? With 60 of us here with different objectives, we hardly get a unanimous support, right? Can we all agree that it's a coalition of willing per topic of interest and we move ahead as long as there is enough quorum?
Got it.
That way I'll be part of some, I will not be part of some, but we can all keep moving forward.
So you're
It can all
saying,
make sense.
yeah. I agree that's a better way of moving forward quickly, and then we can build on top of it. And I'm sure if you set some role modeling on one thematic at least, right? Let's say, I'm just picking this up, let's all work together on the mentor, building good mentors, or working together on collaborating on the mentor. At least that becomes a role model for you to actually think of how collaboration would look like among all of us. So I think from that perspective, I would love to hear, is there any other updates on the thematics?
So we were supposed to work on mentoring because I don't know how your acceleration program works, but usually they work on pro bono mentoring, finding the right mentor interested enough in mentoring a startup because he's interested in sharing knowledge and know-how, and or just because he's interested in getting to know what's happening in the startup world, getting to understand the disruption that's happening in the startup world, etc., etc. For many reasons, a person with some expertise would become a mentor. So we were discussing on the fact that most of us are looking for the right mentors. The mentor is an animal that has a duration of life that is not infinite. So at some point, people have don't have more time to work as a mentor, and or just after one season, after 6 months of mentoring, at some point they're like, okay, that was great. I understood a lot of things. Now I'm off. So we were thinking of how to source the mentors, how to create more mentors, where to find them, and one of the and that again is about pro bono mentoring, and also how to engage on these mentors. So how to engage these mentors. So at some point, just the idea of knowledge transmission or just a great conversation with a startup with an entrepreneur was not enough. And so should we do? I mean, should we think about sharing equity with mentors? How to engage them more, and how to find them. The thing is that Naveen, so you asked me you basically asked a lot of us to work on this issue. Right now, in fact, I would love to discuss that with all of you. Are you still doing pro bono mentoring?
Yes. How many of you guys provide pro bono mentoring, mentor network? Yes, all of us.
Okay. So, is your strategy and your vision is to continue doing this pro bono mentoring or not?
Yes.
It is.
Yes.
Okay. Because I'm just going to share with you what. So Numa has been. I'm from Numa. Numa has been dealing with startups and entrepreneurs for 15 years now, and like recently we had our first international summit, and one of the question was, is pro bono mentoring really helping the startup? So as Ankit was saying, pro bono mentoring is very much time consuming for a lot of people, for the mentors, but also for the startups themselves. Because again, you're bringing mentors who have their own agenda, and they are coming on their own terms, and very often the mentoring is not, it's like you either need to be really on the back of the mentor, on the shoulder of the mentor, to understand what exactly is his insight to the startups, what is he saying to the startup, what is his feedback, so to be able to link all the feedbacks from all the mentors together, and so to make it worth the time of the startup. Or what you're doing is very counterproductive, because basically one entrepreneur, and that I've seen often, one will get different feedbacks from different mentors, and therefore completely lost in an ocean of information, while he or she should be just targeting whatever is the weekly objectives that he has, and the KPI that has to perform. So I mean, for us, and right now what we're seeing is that from pro bono mentoring, from a pool of mentors, we are coming back into having 2, 3, maybe 4 dedicated in-house experts or in-house mentors working for them, giving them a comprehensive, holistic type of help, but very logical, very much like hand-to-hand, trying to really be there for them in a long-term basis. The idea is to give them to help them on their roadmap with clear insight and clear mentorship as well. So this is basically, I mean, like, this has been around like for us, and we are thinking that how to reduce this the waste of like a lot of time of the entrepreneurs trying to understand where this mentor is coming from, why is he telling me that, what is this insight, why him, why now, etc.
So any perspective you have? I think we've come to a very similar one. So when I think of mentoring, it's about helping entrepreneurs with unknown unknowns. Because once they know that they don't know something, they prioritize what they need to learn. They go out and they figure out how to get it. Really, mentoring is about helping people with unknown unknowns. So for somebody to be able to help an entrepreneur figure out unknown unknowns, you really need to invest, we found, between 8 to 12 hours of face-to-face, one-on-one kind of time, understanding their business model, understanding the entrepreneur, understanding really in depth where they are, where they're going, what mistakes they're making, all of that stuff. To even start figuring out, okay, this is what you are missing, right? So, and that amount of time, so until 2 batches ago, we were struggling with this external mentor, internal mentor kind of a concept. We have very strong internal mentor because, we've been entrepreneurs, but we were struggling to figure out how to engage external mentors. But 2 batches ago, we decided that we are not going to engage external mentors for general mentoring anymore. So we moved to a general practitioner model. So we are the family doctor. We know everything about it. Because even before somebody joins the batch, we've already spent 1.5 hours, 2 hours talking to them, understanding their business. And then what we are doing now is saying, hey, this is where your business is. This is where you need to go. This is the delta. For that, you have these problems. We may arrive at that after 6 or 8 hours of conversations with them. And for solving these problems, these are your unknown unknowns. Now you prioritize between them. Right? And then let's attach subject matter experts to solve those specific problems, which are highly granular, well-specified problems. And this model, we have found, works infinitely better than the old model.
Yes.
Because in those engagements, what's happening is when the startup now goes to the mentor and says, hey, I have a problem with my pricing for this kind of a product, can you help me? Right? There is within half an hour, they have the help that they need, whether it's an entrepreneur, whether it's somebody corporate, technical, whatever. Right? Because the problem is very well specified.
Yeah.
And then the mentor is really happy now because within like half an hour or 45 minutes, they've actually helped the startup dramatically. And within 2-3 meetings, typically they say, why don't you go and do this? Then the startup comes back and says, oh, I couldn't understand this. And they fix that. Then they move on.
So, that's what we want to, and that's what
If I can say something.
Yeah, sure, Arvind.
2-3 verticals we are talking about the areas to take forward. One is forming possibly association for government lobbying. Another is mentoring network. Are there other areas where?
So there's 3-4 thematics, right?
Yeah, there's a couple of them.
So could we walk through funding? Who was working on funding? Yeah.
So our focus was only to see that how do we help the Tier 2 city entrepreneurs to see that, majorly to articulate what Mr. Ankit said. We were a person.
Brian.
So we wanted somebody to come and articulate what they are doing. So we focused more on that, and we were able to get 3 people funding in our own incubation center. 3 of them actually got a funding. We actually worked out on that particular project and looked at how actually they can go and talk to the people. So the purpose of me raising that funding topic was only to see that how the Tier 2 city entrepreneurs can come into the limelight of the investors who are in Tier 1, Tier 2, Tier 1 cities specifically. Because here in Bangalore, Waterton, they do meet them very often and they get to know what exactly.
So you're focusing on the access to investors.
Yes.
That seems to be a.
But that was the funding tab too.
Okay. What else came out of that?
That was something which, because for me, my other 2 partners were not there. I was only working with that.
Got it.
I actually figured out within my own network. Srini was very much helpful in a couple of connecting me to a few people, and then we started working with them. So when we actually conveyed this idea, they were actually much more willing to come and help us.
Okay. One area is since we got feedback also from Priyank earlier about the kind of work we need to do from ourselves.
Yeah.
Because we are calling out funding support as a challenge across all of us in our survey, but unfortunately we're leaving it only to the only volunteer for that initiative last time was him sitting in Hubli.
Okay.
Now, if we really think we want to do something about it, I think we should take conversations together, and it's an area we should look at. I just would leave it there because if it's a problem and everyone's saying access to capital is the issue, we need.
So, I mean,
no, in the process I also figured out it was more of they articulating it. That was actually stopping them to go and access the fund. It was not
any other thematics. I just want to make sure we cover the thematics before we.
So collaboration on deal flow.
Sorry?
Deal flow.
Deal flow. Okay, that was another thematic.
No, some.
Oh, you're saying not from the last question.
Best
practice. All right. So if there is no thematic, how?
There's best practices. So I have a quick update on the best practices and the operations. On the operations, right now we have a WhatsApp group, we have a Slack channel. Not many people have evinced interest on Slack channel, right? Because there's threads. So we've got a WhatsApp group. If you're not on that, let me know. What we can do is sub-threads on that based on themes that we pick up, so that if you want your teams to work on those subgroups, let those subgroups be a separate group. And they work amongst themselves and come back to us rather than everyone working on everything. So that operational channel is there. We shared PresiTrack as the tool across all, and a quick area and update to all. We believe that Uber experience of the world changed the way people behave in taxis and the way taxi drivers behave with us. And I thought the same engagement works very well with the mentor and mentee. So PresiTrack has built that module. It should be live by December to early Jan in testing mode, where you can rate a mentor and the mentee can rate the mentor and the mentor can rate the mentee. Maybe not all because no mentor is bad and no mentee is bad. It's the match which you do, which Prasanna was saying is the kitchen curry which we mix together, and the doctor, the GP does that. Is probably that area we could work on that tool. If that's interesting, I'll get you connected to Krishna. You should talk to him. The third is with mentor, which we said from an operations tool perspective, is tagging. Just because a particular person is a mentor in a particular area, he could be a learner in another area. So you've got to tag the right mentor so that we can find amongst us. So I was just thinking of an area which we should talk is on mentoring is, and adding to operations is probably just as an action item amongst us. List down the areas you need mentors, and we'll list down the areas we have mentors mutually. And we just, next 2 weeks, we'll just share the list of people and the areas we are all talking. And we are finding gaps, we'll go and look for additional mentors in the industry amongst us at least. Among 30 or 40 of us.
So, just so you get both of us have two lists where we need mentorship help and where we can provide.
Exactly.
So that
two lists.
So one of
should we
I'm sorry, just one of the action item that we had for last meeting was but again, like creating, okay, so now like we have all little pools of mentors, all of us, and pooling everyone, but how to create more mentors, meaning like how to reach out to industries, and here around the table there's huge corporates with a lot of expertise, how to reach out to these people and make them mentors for the startups. So a lot of people, I mean, that I've met are interesting. They basically are interested maybe. They're interested in the idea of mentoring startups, but they don't know how, they don't know whom. Usually it comes from the network and someone in this accelerator, so I just came, etc.
Okay.
So one of the ideas was to create an event on mentorship. And maybe in fact, like Nevin was suggesting that to do it, like with one of the NASSCOM events, and create an event and basically just like talk about what it means to be a mentor and what we can do
to create a pool of mentor and
mentor
training.
A new source of mentor, basically, how to make.
So, given that you kind of ran this particular thread from the last time onwards, and you seem to have some recommendations with respect to what we can do, can we action some of these?
Yeah, the idea is like maybe like have like a bigger.
How do we take forward?
So who else would believe and partner with SWAT? Let's take that in. One person together, so that we have a backup plan, so the person doesn't fall sick today and then. Okay. So that we Venkat, Venkat and SWAT and
3 people.
Okay. Prabha, right? Prabha. So great. So I'll put that in as a list and we'll take that.
I think pick 1 or 2 recommendations. We just want to keep it going, and for example, if you think that launching this program for bringing all of them together and then saying what mentorship will feel like, and then increase the pool of the mentors. That's one. The second one is listing out who you can provide and putting out a call for who you want. These are probably 2 action items that we can see. How do we go to an action?
Just a suggestion on a model.
Yeah.
Venture Nursery started providing mentors with equity from their pool.
Okay.
And we suddenly had mentees banging our doors, demanding attention.
I see.
And a lot of those companies actually got far more than we were willing to put in, because they were giving us equity and we were also happy to put in time. So you may want to look at that. It worked well for them.
So I agree with that in general, John. One of the things that we do is that we have them give general office hours for specific problems, like Preston was talking about. And that takes up a specific number of hours. Maybe it's 4 hours, 6 hours, whatever that happens to be. If there happens to be a deeper connect between the startup and that particular mentor, and both sides feel there's value, we actually have a standard mentor agreement that gives them X percentage. And even the percentages are fixed based on how far along.
But I'm just saying, explore that.
But you're right, that makes sense.
It worked for them. Some great companies. I mean, the only
that was from there.
Yeah.
No, that's a good idea. It's kind of complicated because it has to be linked with deliverables.
No, actually,
so
both
the
parties
get
But
that's the thing. So we do the same. We do
could we set a dates which you feel comfortable for some interaction?
It's basically the same, but you need to link it with deliverables. Because any of the startups will not give like 3% of the equity just for some mentorship or something. So you really need to, they need to deliver, and so maybe it's like a point of equity against something, against I don't know what exactly.
There's a couple of standard templates that talk about this stuff. Like Fast is one of them. A couple of these are there. We'll look into it and figure out what works for people.
Okay, so it's Swad with Venkat and Prabha together. And
some date you guys feel comfortable.
Yeah,
we won't hold you to it, but at least we know.
Right now,
so no pressure, but the next meeting by December. The next meeting we're proposing is December 7th for all of us at Think Next. So no hurry.
By Think Next, if we have some
tomorrow.
December 7th.
I would strongly recommend we all use Slack though, because that way you have multiple channels and people can jump in and out as they want. Otherwise, you'll have 25 WhatsApp groups and.
So I have no problems. I've built both channels, so you tell me who, because someone has to respond on that thread, right? You know what I mean?
No, I recommend.
I'm the only guy who's And the request has been no jokes, no spamming because people get switched off. So let it be a meaningful. But share your best practices if you really want to.
I have a good solution. Have a Slack.
Yeah.
And then create a WhatsApp group. Post there saying, please check your Slack. So, all right. So the next thematic, right? So one, we took action on it, right? So the mentoring seems like a very common need. So we are taking a couple of actions on it. And thank you very much for pitching in and then driving this. I think this is huge for the community.
And by the way, the other person you should completely check with is Ravi Narayan, because he also had a startup that did that.
Yeah,
Mentor Square. Yeah. All right. So what was the next thematic that we can?
The next area which was there was
the policies.
The
policy,
the government side of it. You had some talk on it.
No, I want to see if any of us have expertise. If not,
okay,
that's probably a value of an association. That,
so do you guys see? I mean, one stark thing which came out is none of us are focusing on it. While we do see opportunities in that space, is that something of common interest?
So just a quick question. So I had a quick question. If none of us are focused on B2G startups, how can we go to the government and say, I have a vested conversation with you? Because you say, you're not focusing on B2G and you have an opinion on mine.
The government doesn't care about B2G necessarily.
There are actually a lot of other programs which DSG offers as well. Okay. I think a lot of IIT Mumbai incubators or any of the IIT incubators, they have already got a benefit out of it. I think THEB has got benefit, even we as Stanford have got a benefit for an incubator setup, but we don't have access for seed fund. There is also something called as Nidhi funds wherein they actually grant for 10 lakhs kind of thing is what they grant for. Each of the incubators which started.
So I have a submission here. I don't understand what we can do with the government. Can we start with just collating what all is possible and then maybe take it forward next time? So if somebody can volunteer to prepare that as a report. Siddharth, thank you very much. Can I come and hug you there?
Anyone to keep
The reason why we were just talking about it is we are part of aerospace accelerator.
Yes.
And for us, in terms of regulations and certifications, it's very important for us to have that kind of a visibility.
Okay.
So we are happy to meet that.
So yeah, please do.
I was looking at partners for that. I think
I definitely need a few.
I would volunteer one person or two people from NASSCOM, because I think as an industry body and as a partner in the journey, they've walked this journey much better than us. And I think we need to collectively know what we want from the government or how to ask it.
No, don't. I mean, no asks here. We just want to know what's out there.
Yeah.
So one thing
I'd be happy to take that.
I think you.
I can say
great.
what.
Yeah.
Just
I mean, Srini,
so
I think
he's
you
there
can
for
find
NASSCOM,
right?
right? Yeah. I can do it. Yeah. Because
the 5 companies who are getting the benefit, just get them connected so that to figure out how they're getting it.
Yes.
What are they getting?
What are they getting? I just want to know what are the ways in
what
which
are the things that's happening?
What is out there?
What is out there?
That's the
And
first.
Srini will partner with you, and Ashok will partner with you.
Because Srini has got a great way of getting money from the government, which is none of us have done.
You seem to be in the right meetings.
And you're in the sector which is very controlled. And NASSCOM has done the right thing. So I think that's a perfect combination.
But
Good
there's
action. Good action. December 7th, we will hear the report.
Invest India, there's an organization called Invest India under the IPP. They're already compiling all of the different schemes that are happening
You
around
can
the
share that information with them.
Yeah. So I'll say.
Perfect.
Let's
begin with that.
Just to add, government is right now very open. So I recently got to know they're actually looking for a full-time consultant because they have already got this feedback through different people, right? I mean, Srini and Abhishek are on the advisory of funds. So they are very open to listen because they have heard it from various newspapers, right? That so much of blow on the Startup India and 5 startups getting the benefit. So it's very clear to them as well that things are not happening. Probably, of course, a very good time to
for us to kind of collate right now, and then December 7th we'll have a more informed discussion about what we can even create and ask. Right?
There are 2 components to it, right? One is how do startups benefit from the
Correct.
The other one is the B2G startup, right?
Yeah, correct.
Government has also said that 20% of government expenditure they are ready to give to startups, right? So are you going to be looking at how do we create that as well as part of your?
No. The first step is
just ask me as a question. Which one?
That's right. No, correct. Mahesh, the first step is to know what's out there.
Okay.
So and then we will see the B2G part of it.
So what's out there and how to get it?
Then next step, how to get it. Third.
So again, on a lighter note, the Invest India guys said we'll compile it. They're a government organization. We'll compile it. We're not guaranteeing you can get it though.
Yeah. So,
what would be your third thematic?
Yeah. So one of the areas which I thought, which I want to just bring as best practices. Best practices, and I think that's an area which we should continue to share. Building some tools, we're working together, but I think we need to bring that cadence together at a regular rhythm. I would request to partner. I'm glad to lead that, but I would like someone else to partner with us.
Partner. So Mahesh is your partner.
And anyone else, because we Shweta, great.
Okay.
So what we do is just focus on 2 or 3 best practices we can share next time. Just 2. Let's go deep into that, share that, and then move to the next. So we learn each time, but also use the tools amongst us. I had wanted to introduce Shalini here. Shalini addresses a space which is very close to what Ankit spoke about. It is about user experience. We are all talking about helping the startups, going everywhere, but one of the key component of this journey is UX UI, and where we take them in the real experience and going and testing it in the cafe all the time and getting that feedback. So Shalini, I know, has volunteered to make that happen for all of us.
Yeah.
So you want a quick introduction?
Yeah. We've actually, NASSCOM has just launched at the Design Summit, we launched the Design for India initiative, wherein we want to bring in design thinking actually into the way software product companies develop their products. And I think Ankit, your story was beautifully told, because I think in your entire product development you'll use design thinking at every step. You know, you prototyped, you reiterated, you had user-centric inputs plugging into your product development. So I think that's a key area, and I think that's the next paradigm where all startups are going to compete. We are competing for that space on the mobile, right? And customer experience is the next battleground. But I think none of you all were talking about it, so I wanted to hear everybody out, and also want to know, do you think that's an area where there is some kind of a lack, of expertise? And because we're doing a lot of programs, and all this is just starting off in the next 1 month. We're going to do a lot of programs, hacks. We're getting people from 5 universities abroad, right from Imperial College to Singapore University of Technology and Design, from Stanford, MIT, and I can't remember. So if you'll see that there is a real need, I want to know what your feedback is, and then build that also into the program, so we customize it for startups, especially in the areas that you are talking about, machine learning, blockchain, B2B, B2C, all the different areas.
Yeah, one data point for you, I've seen this across almost all of the startups that we work with. And we work with startups both at extremely early stage as well as folks who are raising their angel round, you might call it. Pretty much all of them have very little knowledge of what good things are to do in the user interface space and the user experience space. And this would be a big value add.
So we want to partner actually with all the accelerators and enable this kind of capability building into the startups, and that's how we want to partner with all.
And that's an offer, right? She's giving an offer of better expertise.
Is it pro bono paid?
It's pro bono.
Yeah.
No.
We also launched our web.
Is it pro bono or paid?
You're committing on behalf of
It's pro bono,
going
right?
to be both.
Shalini, I thought it's so early.
It is paid bono.
No, yeah, we're going to do a lot of stuff.
I have de bono.
Because we want to invite people from all over the world from these 5 different collaborations that we're going to have. But we want some of it in kind from you, some in cash.
I'll give you a pilot. 5 startups.
Sure.
You won't need to pay us.
Sure.
So,
I'll use your venue and invite another 50 startups.
Absolutely, absolutely done.
Yeah. So a lot of
That's a model that will work for you. You're going to get a lot of offers.
Yeah.
So if you could be a little more explicit, just like two minutes, of what is the kind you want, just simple, so that everyone knows, so they know how to reach out and willing to support right away, like this one.
We've not yet decided what in kind right now. We just want everybody to get engaged. We'll specify based on the need, because we're just starting off. Our website MVP is just up today, so with that new, we're in startup mode ourselves.
Okay.
But we're going to get in a lot of. We're actually building out an entire community that's going to bring in only design-specific experts, mentors, startups. So this is going to be the go-to place if you want design.
Okay.
You know, you want to build that expertise and capability into the organization.
So I will connect you with Siddharth, who's
Sure.
he's got unwell, but
Yeah.
in the School of Design and Innovation, you can talk to him and collaborate. And all those who are interested should just reach out. Or how many of believe design is a critical area you want to discuss next meeting?
Wow.
So who will partner with her, and you can probably come back to us with the next 40 days, what has happened and what all, maybe 2 experiments have happened in real world where you've done some pilots, you've worked at someone's workspace and you've done a session at ours. You know, like what will be the engagement?
Can I volunteer somebody at my space but not me?
Yeah, go ahead.
Yeah, because we just hosted the UX India conference in Hyderabad.
Okay. Yeah.
And we have a bunch of people in the US who want to set up something in India to create this community anyway, so I'll connect you to that through us.
Sure.
Sounds
good.
Yes. I just want to make one small point,
This is, I'm working with Ravi.
All right, so go ahead.
I think there could be a lot of things that could be solved. I mean, I think this is a great forum. Naveen has already created that WhatsApp group. There's a lot of stuff that also happens, but I think we just need to engage more, all of us. For example, Saad has reached multiple times for mentors. And also T-Labs is very, very specific on getting very quality mentors. So, because we don't feel that everybody who wants to mentor is necessarily a great mentor. So, John and I have just exchanged emails. He can't even remember my face, I'm sure. But day 1 they launched. I gave them 4. I sent him 4 recommendations out of our, deal flow. So I think Divanga, Yes Bank, we flew.
He's here.
Yeah. So they told me they're looking for blockchain. So we passed some through, and there are multiple people in the room that we're working with. Whenever we host a UX thing, we've always made it very clear that 3 startups from all partner accelerators. So a lot more communication needs to happen. I believe.
So in lieu of that communication, what I'm going to do is I'm going to say that opportunity continues. So what we're going to do is take this conversation to District 6, which is 2 kilometers from here, at the Sheraton.
Be here while we talk.
2 kilometers.
We'll continue our conversation.
It's a mixer for only us, so we can have this discussion informally, gravitate towards that conversation. If all of you are okay, this is just a suggestion. At the end of the day, it's your call, not my call. Is we propose December 7th, the next event, as the next time we meet. It's an opportunity for us to come back. ThinkNext, as you know, is the conference we hold for startups. It happens to be a place where we showcase some of the startups. And we work with many of you, so if you have some amazing startups, we'll be glad to take them and to any of the market access events that we'll have, as well as some of the demo day part of the extended portfolio showcase. So Anjali, who was here earlier, would have been glad to partner. She'll be hopefully at the mixer. So you can talk to her and how we can collaborate more and take some of your startups and upstream towards markets.
I think that sounds great. But before we close, I'd like one word, one sentence from each of the folks who have volunteered. So as to, what are you going to do be between now and December? Just so that we understood what we are expecting.
Yes.
Yeah, that'll be great. So just to articulate.
The camera is on.
All right. So no, I think it's just the first. I think one of the first things that we have to do is just collaborate all together and find a way forward. Right now, I know that
we have to also get the list from all of them,
yes.
Venti and they need to provide the list from them.
Excellent.
Cool. And I know that Soumya is very interested in taking the collaboration forward. You should talk to her too from Chiron.
Also, is there some kind of a mentor scorecard that we...
Yes. One of the areas which we look at is from that. What are inputs we have from the tools that we're building? We'll rate them, you tag them.
No discussion. I just want to hear from her what she's going to accomplish between now and December 7th.
Yeah.
Now we are turning this into a discussion.
And can you look at the mentor training program?
Yes, please.
Yeah, mentor training program.
So, it's a teamwork.
Yeah,
Just
absolutely.
to make it clear.
Yes, on the government side.
Okay, so it's a suggestion, but I'll work with my other 2 partners on this. I think from now till December 7th, what we should ideally look at doing is collating a list of things that we feel...
What's out there?
Yes.
So just take the notes so that,
And your partners are Srini and Ashok.
Yes. So with Srini and Ashok, I think post Diwali we'll try and sync up to have a small brainstorming session, and we'll list it out and we'll present it to you all.
Fantastic.
And from there on, we can take it forward on how we want to, you know.
Sounds
Does
great.
that sound
So
okay?
just to add to this point, we've been speaking to DIP people and Niti Aayog for the last couple of months, and we've also had this great deal of a lack of clarity. And they are also not sure absolutely on the way. In fact, they're asking input from us. How should we do this, right?
No, I think this is great. I think great initiative. So December 7th, we need to see the.
Yeah. So if you can, we're actually going to be meeting the DIPP folks post Diwali.
Yeah.
So if you can give inputs, collect input from everybody.
So mentor, I'm going to confirm what are the action items from your side just to make sure. Is mentor training program.
So this is a good way to follow up with,
No,
with
mentor
startups
training.
also, like
Mentor training program. And you said, get your asks and gives.
Yeah.
Right? Mentor asks and
Mentor listing the pool and mentor
requests.
and pool and asks from all.
Correct. Those are the two actions that we will do between now and then. Great. The third pillar.
And mentorship agreement, which we will.
Okay.
Yes, and also scorecard.
And the scorecard. Mentor scorecard. Third one, it's on your plate.
No, I'm.
Naveen.
The 10 minutes of the meeting of the meeting.
Yeah.
I do that generally.
Yeah.
So
the third one is the best practices.
I was just thinking the best practices should be. I believe the person who is better than me as a coach is Prasanna.
Are you volunteering?
So Prasanna, because I know that, see, there is expertise. I know.
You don't have to explain. Prasanna's agreed. Yeah.
Prasanna.
I'm trying to get to District 6 right now.
Naveen.
Yeah.
Shweta.
Shweta, yes.
And Mahesh, if I remember right.
Mahesh, that's correct.
No, nobody else wants to share best practices.
No, hold on.
People are welcome to
You guys recruit later. Okay, so there were three. There was a fourth one? Or
no, there was tools.
On that last point on tools, we have used a whole range of tools because we are running such a large program, so we are in need of tools.
Yeah, so
so we tried a tool that you guys had recommended, Chrissy Track. So we are quite impressed with that.
We've added version.
So we've done some pilots with it.
We're doing version 2.
How many people do you have?
We have about 20-30 startups. But we are just evaluating some pricing and stuff. But it's a very cool tool. Other than that, we would like to share all the set of tools that we have been using. And even for this, a very nice tool for helping startups with finding. Sorry.
This could be a good discipline.
Yeah, so I think I think over beer, and if we still can't finish it by then, December 7th.
Okay, so I will put Ashok as tools. Ashok.
Yeah, I'll be happy to share.
Ashok, share. I mean,
tools best practice.
Tools are for tools. Ashok. Is there anything else we had agreed upon?
No, John has not taken anything. This is very surprising.
I'm just a baby in the startup space.
No.
John is paying the bill at this.
I'm paying the bill at this.
John, your father is really happy.
No.
That's exactly why you didn't say I was clapping.
Why do you think he's clapping?
I'm going to pay the bill with his card.
Oh.
So listen, I mean, are you creating a email group also? It will help.
Yeah.
Okay.
So
when we create email group, that means we have really grown.
Deal flow is one thing that we spoke of last time. Sourcing.
So one of the areas we heard from Priyank as well as is comparing deal flows with VCs. They've got a list and they do surveys and assessment. We do surveys of every startup.
Hold on, 1 second. I think my point is 3 is a sweet number. Let's fix these 3 things and get some actions going. I think by next time I want to see. Last time we discussed. This time also we are discussing. Even if we can achieve these 3, if somebody has volunteering capacity, please join one of the 3 and make sure that we deliver something. So next time, instead of just being an info session, if you can deliver this, that would be a great positive momentum that we have created. Then we'll take the deal flow. Right? I guarantee that we will get there. Right? Is that okay? Is that fair? So if anybody else wants to volunteer, please volunteer to
and one last thing. What do you want as the agenda for next time around?
No, it's not your fault.
So Bala, before we go to the next time around, I have a request.
Yes.
Everyone comes here. It's a great participation. We need feedback for the next session. So I'll send out a survey for all of you to give a feedback for today's session. But what I want is recommendations for the next meetup. One can generate content in isolation, but it would be great to have your feedback and some of you take the lead for what do you think is the content required. See, we are facilitating that conversation, but you can take the lead.
Asking someone to volunteer to
to be a partner.
Put the December 7th together.
Yeah, the agenda and, you know,
Let's add that to the best practices agenda.
Yeah,
We'll take
best
that
practices.
and take
So the three tracks will come and present, and their own date, their deliverables, and then we'll discuss, you know, like deal flow, other stuff, and then we'll take it forward. Yeah. Thank you guys. Thank you very much. We'll see you guys in business.